Hi, everyone. Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And I'm Will.
And today, the guys and I are going to talk about what the heck is happening in freaking housing. We do that all the time. But today, we got to talk about investors making up a big bulk of home buying again. But home buyer sentiment still being muted, even though we are seeing it a little bit differently in some ways, somewhat similar. But we're going to start with the investors thing. Yeah. So from CNBC, investors are making up the highest share of home buyers in 5 years. And this is a new quarterly number. So quarter 2 of 2025, they had an increase of 27% over the first quarter of the year in investor purchases. That seems really high. Am I missing something?
No, it's actually, I don't think you're missing anything. Especially now that we're considering social media, Andy, and all these DIY, I was going to say DUI.
It would have been great. It would have been great. It would have been great if you said
that. Would have been a different course, But all these DIY, shows that are going on, Andy, it's just encouraging these investors. And then when you're hearing that most self-made millionaires have come from real estate, it just entices like the regular consumer. So let's just consider this when it comes to investors. I know we hear it to an investor. It's like, oh, this guy that's, investing has done so many properties. But listen, that's not the case. We have worked with a lot of investors that are curious and say, hey, Will, Brian, I found a great opportunity. Can you help me with this? And because they come to somebody that's experienced, I'm going to say, oh, yeah, absolutely. We're here to help you. Not a problem. What kind of experience do you have? Oh, I have none. Do you have an LLC? Oh, I have none. Well, with everything being so darn easy, Andy, it just makes it more enticing for a regular non-investor to say, I'm going to go in and invest.
Now, before you go anywhere else, I want to put this out there because I think that some context is going to be helpful because of what you're saying now. And I marked this out on this here too. So small investors, what they call a small investor is someone who owns 10 properties or less. So first of all, that's awesome. That's a great little definition, right? 10 or less. Now that makes up 90% of the investment market. Yeah. So that's a huge, by far and wide, that is a large majority. 90% of these are small investors that own 10 properties or less. Brian, you were going to say something? Go.
No, I was going to say you guys hit the sweet spot, honestly. Small investors are gaining ground, and it's because I've realized that they found out it's more accessible to buy a fix and flip or an investment property than sometimes it might be to buy your primary house, which I know is ridiculous. And people are like, what do you mean? Like they're going to lend you money on an investment, but not on a primary? In a gist, that's kind of how it works. But if you're a buyer right now, chances are you're competing against a first-time investor. You're competing against a small investor. And it's not just institutional investors nowadays. A lot of the investors we work with are local. Yeah. There are people that we've met at these meetups. There's people that I've met on social media that are in our backyard first time. They don't have millions of dollars, but they're actively looking for these opportunities.
So Absolutely. I have an off-script question for you guys. How much of this would you think is due to people feeling like the way of pursuing the American dream is changed versus 5, 10, 15, 20 years ago? Because, it used to be like, okay, I'm going to work for a long time. I'm going to own the house I'm going to live in. And then I'm going to put money away in my 401k, IRA, retirement, my investment portfolio. And then the accumulation of all those things will net me some sort of like retirement result later down the road. So how much of like maybe some of those things being less likely for people are you thinking is weighing in on this type of behavior?
So I think a lot, because I feel like in just 10 years, our culture has changed so much in the way that we just look at life. You could look at any aspect of life, any industry. And I feel that now with, alongside the power of social media or just accessibility to just a mass amount of information, people can now go and get the information they need, which before they need to pay thousands of dollars to somebody or a course or go through, rigorous, maneuvers to get that information. Whereas now if you can connect with the two right people, find a house, find a deal, find the money, it sounds so simple the way I'm saying it, but is that accessible? I'm not saying it's going to be easy, but I'm saying you can go out and do it. Whereas before you had to go through gatekeepers, you had to go through people that were already doing it, that had big bucks to be able to get into the game. Now it's a low barrier entry. Everybody could get in as long as you have the right team, the right information, which everybody has access to. Yeah. So it really comes down to what the person's motivation is, and if they want to move on it, they will. And we've been seeing it.
That's the premise of the whole. That's the premise of the whole question. It's like I on my own. I'm asking you partly because we have a different feed that gets us to social media. Yeah. Like, we have different roles in this company, so we see things differently for that reason too. But also we're in different age brackets and stage of life. No no grandkids. I have older kids. You have younger kids. You have grandkids.
Yeah.
So you're like
Three different.
yeah.
That,
So,
yeah.
but that the reason I'm saying that is that the premise is I have seen a lot more people publicly on social media admitting, hey, the old American dream is dead for me. The new one is this. And so to me, I think that this is a reflection of that pursuit, that people are going, well, I am going to own 1 or 2 or 3. You even have people coming into college or even in high school now saying, I am going to go through school, whatever, and then I'm going to just start buying places. And that's like their whole game plan is along the way over the long play in life doing this.
I just had a conversation this weekend at my niece's birthday party. My cousin, his daughter's boyfriend is in college and he's studying to do like a business, right? But he doesn't want to go into actually pursuing what his career does. He wants to get into real estate. So he's
it's business.
Yeah, it's business, but it isn't like what you go to do business for. You go work at a company, you work your way up, you do sales, HR, whatever it might be, but you work up the ladder. He wants to do business, but he wants to go into real estate. So he's already looking for ways to get into real estate before he gets his degree, because he's like, I don't want to go into the regular world and do my regular thing. I see that the real estate has it out. I like what I see. So I want to get into that.
Yeah. But don't be fooled. It's not that easy.
It isn't.
Okay? If you don't have the right information in front of you, like even the right spreadsheets, a spreadsheet like, it doesn't sound as much, but a good spreadsheet will take you a long way, right? You have to learn to analyze. And then there's also carrying costs that go through all of this. So the proper financing has to be put in place. And I think a lot of that has already been put in place. And we're seeing the non-experienced type of investor go in and taking a leap of faith in doing this. But obviously, the money's lent out because the deal works. Mm-hmm. And if the deal works, the money finds you. And that's what's happening with the whole American dream, is people are realizing there's other ways to achieve that dream by going and borrowing these funds, maybe at a higher interest rate, but there's no income requirement. And it's this income requirement, it's not personally, it's based on the asset that you're actually purchasing. So a lot of these people are understanding the formula, and therefore they're saying, this is now the new way that I'm going to actually achieve my American dream, And so I think it's great. I created an LLC, you didn't let me finish earlier, but people are learning to create a business based on creating an LLC so that way they limit their liability, And so those are things that are very easy now. You can obtain an LLC online and it's as quick as a couple of days and you're done. You can create operation agreement right there, bring partners in. And that's another big thing is, back in the day, people say, don't partner, don't have partners. It's not a good thing to have partners. But guess what? How many partners does some of these most successful billionaires have? They have multiple partners.
Investors that invest.
If like Elon Musk, they say what's the percentage that he owns for Tesla? And he's only like between 9 and 13% owner. His other partners own the other shares. So you need partners in any business venture. Like they say, if you want to go fast, go alone. If you want to go together, we go far.
Yeah.
And so that's where we're at, and I think that with all this data, I agree with everything they have to say here. What I don't agree is, again, all these policy makers just trying to put it and almost prohibiting an investor to go and buy a home. Like, these are like, why?
Well, I think it gets dicey because it's almost like there's some selectivity in it. We don't want like a small investor to be able to do this or that, but we'll let, BlackRock own 100 million properties or whatever. That's obviously an exaggeration, but like it gets really dicey really fast because then we're going to go down this rabbit hole of who's in everyone's back pocket and that kind of stuff. But it's certainly a problem. It's a problem relatively, right? Because here's the deal: if a traditional buyer doesn't buy a property that's for sale by an investor, then another investor can buy it. Now that can turn into a rental that someone's going to need to live in, or they're going to be an unhoused person. They're going to be homeless. Yeah. So at some point, the need and the necessity for us to have shelter for people who don't have a home in a growing population, that has to get resolved somehow. The whole supply demand thing still has to have some balance in it.
Absolutely.
What was crazy to me, and they didn't say it this way. They actually kind of said it in an inverse way in the article, was that in this period of time in the second quarter that we're talking about, they sold over 104,000 homes, okay? And here's what the article says. The article said 45% of those going to traditional home buyers. You know what they didn't say?
65.
The 65%, or no, sorry, the 55. Yeah. The 55% went to other investors or an institutional buyer. So the premise of it is okay. Hey guys, guess what? Investors made up 25% of all. Or sorry, what was it? 25%. 25% of those sales in that quarter, right? And then they said also they sold a bunch in that quarter, and 55% of those that they sold were sold to investors.
That's crazy.
So this little category, I shouldn't even say little even, this category of home ownership and home swapping, if you will, I think I don't see an end in the near future. It's obviously a trend going upward and to the right. It's only getting more and more at this point. And I was thinking before the show today, I was trying to like war game in my head, like what would it cause for this to actually stop? And I'm like, individual buyers that pay more, like cumulatively more masses of people would have to just be a better buyer than the institutional buyer.
Yeah. And here's the thing. I mean, the institutional buyer is very difficult for them to buy on and buy a property that's dilapidated, right?
Don't go there.
And that's why it's called a fix and flip. They got to go in there. They got to put, and some minor fix and flips are cost you anywhere from $30,000 all the way to $120,000. So $120,000 being that's a big fixer, right? So the pros about this is an investor gets to go in there and fix them and puts it back in the market, where now a buyer that can afford that can actually take that over.
Bam.
The cons about it is, if we get a lot of these, obviously the investors that are looking to stick with these properties could also control more of the rents. And, could also increase the price of the home, because now it's not dilapidated, it's fixed up. So now I'm going to put it on the market for more than what that other property that is normal, that doesn't have the upgrades and stuff, maybe I'll sell it for a little higher. So, like everything that we do in life, it has its pros and cons.
I also like to see the argument of like, what about all the houses that just cannot be put on the market because they just do not make sense for somebody to put it on the regular MLS and sell it?
Give me an example. What do you mean by that?
I go down to La Vista, like by where we live. It's like I could see a very nice house next to a house that windows are broken. There's cobwebs everywhere. Like the house just looks like it hasn't been renovated since it got.
It's kind of like ready for Halloween all year.
Yeah, but it's like houses were made in the 1950s, hasn't been upgraded since 1950s. And I see a lot of those, and I feel like, well, like even if you wanted to go and sell, chances are that the house inside looks a lot worse than what it looks on the outside. So it's like in that instance, I feel like there's a lot of areas where you could put a whole bunch of houses that maybe an investor could come in and just buy either, a lot of those small communities like they do in like Detroit or communities like that, and those are all houses that are dilapidated. Yeah. I don't know how much of those houses are out in the nation, but I do feel that there is a lot more than that could make up a lot of that statistics of why they're selling it to investors.
Well, the cool thing about this is talking about nationwide.
Yeah. So that's why I'm like, not just here in San Diego. I mean,
exactly. This is pretty wild.
Yeah. And I think that's maybe, I don't know if I should just frame it as a positive, but like if you're watching this and you were thinking to yourself, oh, I'm wondering if this is still something that people are doing. Yeah. There's a lot of them doing. There's a lot of people doing it. Oh, I wonder if it's going to continue for the next couple of years.
We're so short in a supply that we need people to.
Yeah. So
it'll continue happening.
You're trying to get on this bandwagon. There's plenty of opportunities for you in this market, as evidenced by these figures.
Yeah, and just talking about the simplicity of financing, we've been able to finance newcomer investors with just as little as 10% down. As little as 10% down with the 9.99% interest rate. And then remember, when we actually give the financing to the actual investor, because it's going in the LLC, there is no responsibility really to the actual buyer. It's in the LLC.
So I always get asked like, hey, why do I have to have an LLC? Why do I have to have a corporation? And, I saw this very good explanation where it says like, if you're buying a rental property, right, and you own it, let's say the tenant breaks his ankle on the porch and blames you, sues you, they can go after all your personal things that you own. Assets. If you have an LLC, they'll only go after whatever that LLC owns.
Because the LLC owns the property.
And if the LLC only owns the property, then they could only go after what the LLC
exactly.
owns. So it's a protection to you in the end.
The other thing that's cool about that with the LLC is when you run credit and you're looking at there's a lot of investors that claim a lot of income on their taxes. They want to go a traditional route and buy a home traditionally. If they have a fix and flip or multiple, those properties don't even show up on their credit report. So that's another creative way for these people to actually kind of wait until a good opportunity presents for them to buy it as their primary residence. Then they can take a different route, which is phenomenal.
I'm going to go back to the Wayback Machine. When we first were starting in this industry and people were buying a lot of homes in 2005 and 6 and 7, like there was banks had a limit of how many mortgages you could have on your credit report, and they wouldn't lend to you after that. So there was no other way. 10 was the number. Yeah. So there was no other way for you to own more. So going back to this whole small investor 10 units thing, that was kind of like this threshold, not only for this definition, but also back in the day, you couldn't have more than 10. Yeah. So let's say let's say that's your business, right? Let's go back to this kid talking about wants to do this business. Well, what if you want your 11th and your 12th? There's no other way. There's no other way. Another way. Or the other way was, partnerships and that kind of thing, create an LLC and whatever.
And just to clarify, I didn't mean that he wanted to become an investor. He wants to become a loan officer or a realtor.
Oh, I'm sorry. I misunderstood. Okay. That's on me. All right.
I would have said the same thing, buddy. It's going to Lockway Road after college.
Any other thoughts on this, guys?
Yeah, no, absolutely. I just also want to mention that the type of financing that we've been providing with these fix and flippers, it's also been where we can finance the rehab costs. So if they're purchasing a home here, for instance, I got one right now, an extra $600,000. It's all based on your ARV, what the after repair value is going to be. And then we're able to do it with 10% down, which they're putting $60,000, and the rehab cost is $120,000, but the appraisal came in at $980,000.
Oh,
so they're under 75% loan to value.
Wow.
Right? Or ARV. And we're able to finance 100% of those funds so that they don't have to use their own funds. We finance the rehab costs so that way they're in it with just 10% down plus whatever the closing costs are. So it's a very creative way of how to provide financing to an investor that doesn't want to use and understands the power of leverage. Why do I want to use my own funds? It's an investment. The investment should work out. So it should fund itself.
Wow, that's a good example.
And there's a lot of people that are actually taking that route, and it makes it so much better. And it's what's called a non-Dutch interest. What that actually means, when we're giving that $120,000, it's like a home equity line of credit. They only pay interest on what is used. And so it just becomes more favorable and it allows the investor to go in it with the least amount of cost by maintaining the property, which is called the carrying cost.
Mm-hmm. So that's actually really smart. I mean, that's a super creative solution. Yeah. I'm pretty sure people don't broadly know about this. But if you're in that situation, that ARV is working out pretty sweet in that deal.
Absolutely.
So some might even be tighter than that, but it's still going to work out because the math will math. But that's a great one.
Yeah, we got a kid that bought it. He's just closed escrow. And this property was in Escondido. We did it for 1.49.
But appraisal 1.49 and then 340 in rehab costs. And then, original appraisal came in at 2.4 million. Exit price and sold price 2.8 million.
2.8.
Get out.
No.
So he's going to be in this deal for 1.7 million.
He's already exited.
No.
Wait. I'm sorry.
Included in the loan amount, the 1.4 with the 320,000.
That was with it. Okay.
Something.
I was doing 1.4 plus 300.
No, he didn't break it down on that one, but that's the way it was.
That's nuts. That's
another
crazy.
condo in La Jolla, same thing. This kid he hit home runs. Not everything's a home run.
Wow.
And so that's just the power of really identifying a good opportunity, taking it down, and it's scary. But when you're using other people's money, it's not as scary.
Yeah.
You just have to have better control of your funds.
Wow, that's crazy.
It's nuts.
Wow. Yeah. Well, if you're in that kind of situation, or you're a couple steps before that you find yourself in that situation, come and talk to the guys about that.
I know it's kind of like it startles you, right? But
I'm like, where do I go from here? Like, I don't want to just hard shift topic because this is relevant to people.
Of course, that can make he made 1.3 mil right there. After capital gains, probably it's crazy on one deal,
and then just flipped it and recapped.
Who makes that in their lifetime? There's some people that just don't. They make that much in a lifetime.
Wow,
and it all came from the risk that he took.
Exactly.
So I want to say something too that people say like is cliche, but this is a great example of is you make your money when you buy real estate. So you're saying he bought this for 1.1 plus 300, so 1.4 million. Sold it,
almost 1.5 altogether.
Okay, and sold it for 2.8 or whatever.
Yes.
Okay, so he made the money based on the price he paid for it when he bought it. And yes, obviously the sales price is the other conduit, guys. Duh. But that adage, like people like they put their nose up about it sometimes because it's like, oh, that's just a thing you say. That's just a thing you say because you're in sales, and it's like, okay, well,
it's recorded records here in San Diego. Escondido.
Mic drops, recorded records. True.
You know,
hey, yo, check the public record.
Not every deal is going to look that way, you know, but when they do, and you become a little more savvy, you understand how to identify good deals.
Yeah.
That's where we're going with this.
I love it.
So I agree with this.
I was going to say, I love it when cliches become case studies.
That's it.
Those are awesome.
Exactly.
Okay. Well, the next topic today, guys, is about home buying still, but home buyer sentiment. So traditional home buyer sentiment remains muted as most say it's still a bad time to buy. This is from Realtor.com. It's mostly survey based, and I don't care as much about their opinion as much as I do care about like ours and what we're seeing on the front lines, because you're talking to so many different people, clients directly, but also realtors. Not just on our team, but the other teams that are working around us here at the office. I'm overhearing a lot of people still saying, I want to buy a house, I want to get qualified, I'm trying to get into a place. Like that hunger is, I think, partly matched with the first topic is, I know investors are buying places, but I want one for my own, for myself. So they know, people that are sitting on the fence, they know I got to jump off and get into the game. Otherwise, I'm just going to be surrounded by investors. So what are you guys seeing?
I think for a most part of buyers, I feel like their psychology is working against them. And what I mean by that is that everyone thinks right now, at least for the major part of people that I speak to, everyone thinks it's a bad time to buy. And when that happens, a lot of the transactions diminish, which then that for me looks like more opportunities for negotiations, better terms, seller credits, and a way that you can have a better deal if you're in the market when there's not that much people in the market. So I feel that right now is working against people where they're listening to a lot of the noise that's out there. It's not a good time to buy. Rates are still high. Yes, they are, but there's a lot more deals that can be negotiated. And, just from experience, my past client, he got $25,000 to pay down debt and to pay their closing costs via client. So there's really good times for negotiations on the properties that have stayed on for longer than they usually should be. And if you're playing the market right, then you're going to see all these properties that, have time on the market that have a better chance of negotiating if you have the right team behind you. The agent right now, I think, holds a lot of responsibility in being aggressive on those houses that are, sitting on the market longer, because you can ask for certain negotiations if it's within the means of the deal still making sense for the seller. And I feel like a lot of people are also expecting rates to drop, and they're expecting them to drop and just completely nose tank. They're not going to do that. We've been saying gradually they're going to drop. So your best bet is to get in early and gradually ride the rates down as well, so that you can see where you started, but then at the end, it's going to be a lot lower from all the data we've been seeing today. And at the end, just look at properties if you want to snag a deal where there's time on the market, like less action, less offers being done. In those areas, in those pockets, you could probably snag a better deal than in neighborhoods that have high traffic, a lot of people want to move to, but it all comes down to what you want. So I think all that needs to go along with that passage.
I want to commend you for creating a new word on the show today. Can you get your pen right there?
Let me see.
Write the word nose tank.
Nose tank.
I like it because you smashed the market to tank and for rates to nosedive. So nose tank just got born on the show. We're going to use that, right? I'm saying that just for historical reference here. I'm going to use that term, and I want you both to understand what it means. Because Brian,
I got it.
I was with him. I was like, I love this.
Same language.
No, I was like, hey, they're going to nose tank. Like
he didn't even know that. If you were drawing, that's a good word. I'm using.
Were you wondering why I'm over here like smiling like all goofy? I'm like, oh my god, I'm gonna remember nose tank today. I love it.
Every time you guys do it, either I'm hitting a point or I just said something real funny.
Well, no. What's funny is actually you like creating that. It's actually what people are waiting for. Like I want them to nosedive and the market to tank. Well,
nose tank.
We want both. Nose tank. All in one.
Okay.
My biggest thing with this is 7 out of 10 buyers are actually saying that it's not a good time, or if you put it in perspective, 73% of the people saying it's not a good time to buy. But let me just give you a historical background with things. When my grandparents first bought their home, they owned in LA, that house that was, a 2-bedroom, 1 bath, 1,000 square foot home, they bought it for like $30,000, and if I continue waiting to think that that's going to happen again, I'm fooling myself. Right. And if I'm thinking I'm going to get the same rate that they got, I'm fooling myself also, because the time that they bought that rate, it was like 13 to 14%. So I've never, even when I bought my first home in 2000, my interest rate was 8.75, on a $242,000 property. So when I got into that, I was scared as shit. I was like, what the hell am I doing? Tanya, are we doing the right thing? And when we got in there, it's like, how am I going to make that payment? Well, we stuck to the dollar menu. We did have that back in the day. I noticed that now it's all value meals, no more dollar menu. But somehow or another, the world turned in our favor. And we managed to sustain that property. And then fast forward in 2006, I sold that property for $575. You know, and in 2004, was it? I bought that condo in downtown, right? For $555, right in front of Petco Park. And then I got addicted to this because it seems like, oh, wow, the world seems to allow me to do these things. Like, why not? I didn't even move into it. So I just rented it, and I rented for whatever my payment was, which was good. And then 2005, I bought that, you know, the other property was 3,600 square feet. So I went from a 16 and change, you know, down to a 36, up to a 36 at 555. And at that time, 555,000 to say $500,000 was a shit ton of money.
It's $1 million now.
It was a shit ton of money. And I'm sorry I'm saying it like that, but I was afraid. We were afraid, and somehow or another, I still managed to go buy another property because the street was so narrow, and I was just being a little kid, like pouting, you know, like, oh, the streets are so narrow, I can't put my car through here. I'll have to wait till the other guy goes through. I need something wider, so I moved to Winding Walk for $630, and then at $630, I ended up putting another $100,000 in upgrades on it, and somehow it all worked out. It all worked out, you know? So if I'm looking, I'm with this. You know, and people should be concerned, right? And it's different. It's a different market than what I'm explaining. But I was going through, things were flourishing, but things were going to get hit bad. And that's when 2008 hit, right?
Hindsight.
It happens. You know, if I would have just stuck to it and said, hey, I could find better ways to keep my property, I'll do that. But unfortunately, I wasn't able to. Out of the 11 properties that we got, I ended up foreclosing on a few of them, and, you know, only managed to keep the business and 2 other properties. And that's the truth. And nothing but the truth will help me God on this, right? Yeah. But things will happen in your life. And you know what? I didn't lose anything. I just lost right now courage to continue doing those things. And it took some time again. It actually took me like 12 years to gauge that courage to want to go buy properties again and go into these ventures, because I had a bad taste in my mouth from all the losses.
Yeah.
You know? But the thing is, I was that person right here. I was at 73%. But until you go and you do it, that's when you realize it all work out. It's going to be in my favor. Not a problem. I just have to adjust my lifestyle and maybe not have that Hummer. I may not have that. You know, you're going to have to go to a Hyundai for a little bit and stick with the lower car payment. But one way or another, you'll manage it. But it is scary. It is scary when we're approving these people, and we just got this kid, a 19 that turned 20
into freaking
at a Camp Pendleton into a property that was 550 or 650.
It was 650.
650. Yeah. You know, married, no kids. Thank goodness, right? Because they're expensive, but the wife doesn't work, and so it's just one income. And he managed to get in there. He's going to make that sacrifice. Yep. And I applaud him for that. Yeah. You know, especially being here in California, you can expect that your home values are going to go up. And the reason why this is going to happen and we're not going to go back to what things were back in the day is because the population continues to grow. Yeah. It's simple economic supply and demand. You know, there's still, even though a lot of people say it's a bad time to buy, once they get approved and affordability comes, and now we're talking about interest rates being reduced again here in October, once again, and we're talking about 96% of the people say we're going to expect another Fed funds rate cut. Yeah. So in a few weeks from now, we're talking about now the Fed funds rate being at 4%. Yeah. And then come December, it's a high percentage already. It was like 89 or 92%. So we're talking about 3.75%. You know, these things will already dictate in what direction we're going in the market with.
I will start seeing it here soon.
Yeah. And that's an interesting pivot to something I was going to bring up, because, you know, typically the argument is, well, when rates go up, prices go up, right? When rates go down, home prices go up or they stay. Yeah. And one of the things that came from this consumer sentiment article was that 20% of the homes that were sold in September had a price cut. Now, I'm going to remind everybody, the typical range for number of listings annually that have price cuts is 30 to 35%.
That's it.
So
that's normal.
Last month was only 20%, which statistically is way abnormal compared to the normal. Yeah. So I know it's just a 1 month reading, but it's making me very curious what that's going to translate to, because if that's the truth, then that means the correction happened.
Yeah.
That means the correction happened. And it wasn't a 10, 20, or 30% drop across the board. It was 5 in some places, 20 in others, or based on property type, condo, townhome, single family residence, multi-unit. That to me got my attention because I'm all, wait a minute, I'm remembering the normal window's 30 to 35% of listings have a price cut and only 20% last month did. Yeah. Well, I think that's a sign, it's a signal of something.
Yeah. No, the markets do shift. And when you're talking about investors coming in like this, you know, I feel confident that a lot of those price reductions are based on current homeowners that just overprice their home and think their home is worth that property that just got rehabbed is the same price. And they'll see that the market predicts like, nope, that's not the case. Now we need a lesser price or negotiate, give us closing costs, etc. So
that even makes the case, that even makes it a stronger case that if they were just being like a hyperinflated mentality about the price, if you extract that, then there's probably even fewer that had a real price reduction, which means what old Uncle Andy in the corner is saying is prices are holding. Yes. And if you're saying, oh, we're going to have a rate cut in October, there's going to be another Fed rate cut in December, the mortgage market's going to go up and down and around that and maybe have some decrease too. If it has decrease, guess what? Price reductions are probably over. And I mean over, meaning like 10 to 15% price correction is still well below the statistical average annually. Price corrections are over if rates start slipping.
Yeah. No, it's a crazy market. So considering this article, I do understand it. I mean, we got a government shutdown. We got, what was that? The jobless claims is far worse than we anticipated. And that's what we saw, an interest rate cut. So all these things, the labor market is everything. And in order for us to pick up, consumer confidence, et cetera, we need the lower rates, where we need to bring back affordability.
So final question for you guys on this specific article, and I want you both to tell me what you've heard. We have people that are buying. What is it that they are being confident about? You have an example, like think of someone that you've recently talked to that is buying a house, they're all excited. Yeah. What are they all excited about? I mean, if there's a muted sentiment, what are these people we're helping actually excited about? Well,
again, it's a small pool that can afford, but they're happy that they could afford something. A lot of times, like I have a client that's actually getting PCS'd over to Illinois. They were here in San Diego. He was just here for 3 years. He didn't buy here in San Diego because he was an E3. Now he's an E4 and he's stationed in Illinois. He's married. His wife has 100% disability. He's a young kid. I call him my nephew. But they were able to afford $500,000. They want to stay within their means, which is around $350 to $385. In Illinois, that's more than enough. So I get them at $410, but they're excited to start owning something. They're excited that they're going over there, and because of the rules and regulations about 100% disability when it comes to property tax, that they're exempt, it gets them even more excited because they were like here renting for $3,200 for a 2-bedroom, 1-bath in Eastlake. Now they're going over there and they're looking at homes where it's like 4 to 5 bedrooms. So they're like excited, like, really? We go from that to this and we own it and our payment is under than what we were actually renting for? The pride of home ownership is the driving force.
Nice. Brian, sorry.
That's what it is. And the vision of creating now some type of legacy is the other. And those are the things that are being taught now from the parents that didn't buy and invest in real estate. There's a bigger picture. Here's the vision. Here's how we create generational wealth.
That's awesome. That's great. Sorry, I wasn't trying to cut you off.
I always do that, so it doesn't matter.
No, I didn't know what you were going to say next. I saw Brian like scrambling, writing all these notes. I'm like, oh shoot, Brian's got a lot in the tank here. Well, no, I know you're writing down so you can notate all, but no, sorry, I apologize.
No, you don't need to.
What were you over here writing down so frantically?
For me, I work with a little bit of a younger demographic, and a lot of these, VA young couples that are buying, other young couples that are not military buying. They understand the power of leverage and getting in right now, and then starting to build that equity. They have long-term mentalities, and their renting situation just doesn't make sense for them anymore. They're paying $3,500 to $4,000. Some of them have decent jobs. They have combined income above 6 figures. But more than anything, at the end of the day, it's also an opportunity for them to start investing. And a lot of them realize that the first house that they buy isn't going to be their forever home, but it's their starter home that opens up the opportunity to then, like Will said, buy a new house, buy another house, and then just repeat the process. And a lot of them have kids, and I feel like that's the biggest driving force for them, having something that they could then pass down to their kids, because as we see right now, if they bought back then when your grandparents bought, they would have, had all that spread, but we don't have that same opportunity anymore.
Yeah.
So they have to make that sacrifice now so that later on they could, pass that down. And I think that's what, a lot of the younger, buyers that I'm working with understand.
Yeah.
And the spread will be there. It's like the stock market. You know? It's not timing of the market. It's time in the market. It just real estate's the same way. It's not timing of the real estate. Get in it to win it. Now you get the tax exemptions. You're on a 30-year fix, or you're paying down principal. So you're just building equity. And the great thing in San Diego, every 10, 14 years, I say 14, I'm saying more like 10, your house is almost going to double.
Yeah.
Because again, we're landlocked, and those are the things that you have to factor in. And there's data to prove that, which is the great thing about it. The data doesn't lie. If you look at the historical graph, we're in a good position if you own something. So I get the sacrifice. You always have to make that sacrifice, but everything comes at a sacrifice. Getting that new job comes at a sacrifice.
Yeah.
Are the people I'm going to go in there, am I going to really like them? Or are they going to deter me from wanting to do what I'm going to do here? Like everything comes at a sacrifice, and you have to always be open-minded and be willing to be open to the new opportunities that could present themselves. And if they're not there, well, then just, hey, you know what? Time to move on. I have to go figure it out somewhere else.
Yeah.
And so that's the way with real estate is too. There's a difference buying Chula Vista, buying La Jolla, buying in Escondido, buying in Encanto. Everything in real estate is going to be different in any part that you buy. So pay attention to what you can afford, what you really want, and get into that area.
Yeah.
Awesome.
That's really good.
Sacrifice.
Really good sound advice, guys. I really appreciate it. And thank you. Thank you for sharing what you're hearing people talk about and like their motives and their reasons. Everyone has their own personal reason. But I think sometimes it's really hard for maybe like the online audience to carve through all these headlines. And there's tons of YouTube videos out right now. But like, the market is collapsing. Watch your head. Everything's falling. Why you shouldn't buy right now. And this and that. And it's like I get that, but most of these people aren't in an origination position like you are. They're not talking to people who are actually buying right now. And only history is going to tell if it was the wrong time to buy or not. But again, this also, it's not necessarily the wrong time to buy on any timeline, because you can only say that looking backwards. Yeah. And you were telling an example earlier of something that it was true for you 20 years ago. In 2005, I bought this. In 2006, I bought that. Okay. So someone who buys something in 2025, fast forward 20 years in your life. Okay. In 2045, then you can look back and go, oh, well, maybe it was a good choice or not. But it's hard to say that right now.
Well, in the mortgage meltdown, when it happened in 2008, that was when the peak was.
Yeah.
And that's when like people are like, you shouldn't be buying right now. Well, fast forward it now. They look like geniuses.
Well,
they're like geniuses.
Look at the place you picked up in 2011 or 11 or 12.
12. Yeah. That house was like selling for like 1.2. I ended up getting 565, and the bank paid all my closing costs. It was a short sale.
Yeah.
Gated community, 4,200 square feet. Like, why not? I'll take 2 of those right now. But at that time in 2012, guess what? Yeah. That was scary.
You're crazy. What are you doing?
Scary. It was scary. No. Yeah. But it was still a lower payment than what I was used to before with that other property winding walk.
So crazy.
So these are the things, you have to learn as you progress.
Yeah.
And so, those are the life lessons. Again, I would love to go to my grandparents and tell you how many properties I should have bought, right? Hindsight though. And when they bought, it was a scary time because their wages were not what they are now.
Oh yeah.
Either. So it's like everything, listen, it's never a right time. When is the right time to invest? Now, if you have it. When is the right time to buy? Now, if you can. Like, it's what it is. Just hold on. Longevity will tell you what a smart decision you made.
Mm-hmm. I think the saying goes like this. The best time to plant an oak tree was 50 years ago, and the second best time is today.
Today.
Yeah.
I love it, man. I love real estate. It's like having kids, right?
Thank you. Yeah. Oh, man, everyone's different. Thank you guys so much. I really enjoy the show today. I appreciate you being prepared, being ready, and being available. And thank you to all of our watchers and our listeners. We appreciate you joining us every single week. If you're new to the channel, please make sure to not only subscribe to the channel, turn on the notification bell and all that good stuff. Share the video with someone who love, and trust, who maybe needs to get that little infusion and get infected with some positivity about real estate these days. There are ways to make it in mortgage and real estate still in 2025. So thank you guys for another great show. Thank you all for watching, and we will see you all again next week.
That's
Bye.
right.
See ya.
See ya.
If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.